Hello nieces, hello nephews, it's your Uncle Charles here and welcome back to my YouTube channel where we do unbiased technical analysis. Now, yesterday after the SPY cleared the 427 level, today it gave us a nice back test as a support. And you can see by this nice long wick here on this 15-minute candle, there was a lot of buying pressure. The back test and gold strategy worked pretty well, okay, with 427 holding, and it just started clearing out resistance. Alright, the setup I gave you guys was above 427, we had 428.5 as the next resistance level, and if that cleared, we could possibly go test the 429.7 and then the 200-day moving average. As you can see, it worked out very well. But what I want to talk about, which is more important, is how SPY, as soon as it touched the 200-day moving average, which is around 431.5, okay, you can see it on the daily chart right there. This pink line is my 200-day moving average, you can see. All right, we got a nice long wick on the daily candle, okay? We can see on the intraday how we got a nice hot stove rejection. What is a hot stove rejection? Well, go ahead and touch a hot stove, okay? Or maybe a hot pot and see what your hand does. And that's pretty much what the price, don't do that, guys. I was just kidding. And see what happened with this price. We touched it and bam, nice rejection. Took out a level like nothing, melting it through like butter. However, started getting some buying pressure at the 428.5 level, and then it went back and tested this level that I had, okay, 429.5 to 430 zone. But like I've been telling you guys, the exact number was 429.7, and the reason for that number was because you can see this light blue line here on the daily chart. I made it thicker. It was from April 28th high and May 4th high. We had a double top over there, and it was gonna be a critical level for it today. That in yesterday's video, I talked about a major test for the bulls, or a big test for the bulls. Clearing this level was that level that I was talking about. That's the major test for the bulls. As you can see, we literally closed 1 cent below the 429.7 level. We did not clear that level. We got a hot stove rejection from the 200-day moving average. Question of the day is this the top? All right, is the top in? Well, guys, this hot stove rejection from the 200-day moving average does not make me bullish. RSI is extremely overbought. When was the last time we seen the RSI this overbought? We haven't seen it overbought since November of last year. And you remember what happened November of last year? Started getting very toppy. All right, we had a nice little downside, 473. We dropped all the way down to 449. Holy moly, that was a big move. Anyways, I'm not saying with the RSI this overbought is a sell signal. All I'm saying is it's a condition. Not a sell signal, it's a condition, and it's a bearish condition. All right? So is the top in? I don't know. But I can tell you the signs. One of my members made a good analogy about how we are in a very manipulated market. And the market makers, they like to telegraph their moves. Okay? It's a great analogy to fighting. Like, you know, when you see a punch that's about to be telegraphed, you know, your opponent telegraphing his punches, is easy to block or dodge it. Okay, so that's what the market makers do a lot. They telegraph their moves. All right, only in trading it comes in the form of trade setups. You guys understand? So when we clear resistance, that could trigger move to the upside. We take out a support that could trigger more downside, and this and that. So we need to see what moves the market makers are going to make before we can decide if it's going to go up or if it's going to go down. Right now, we got a hot stove rejection from the 200-day moving average. That's bearish. Okay, imagine you go to the store and you see your favorite item on sale. What are you going to do? You're going to buy it as fast as you can. It's usually $4, but now it's cost $1. You're going to grab at it as quick as you can, right? Because you think it's a deal. So if the market makers are the one moving the market, and you got a hot stove rejection for the 200-day moving average, can you guys see why that's a little bearish to me? Okay, now I know I'm sounding bear biased right now, but just to let you know, I'm still gonna trade unbiasedly, but I just want to note that. Okay, so with this hot stove rejection from the 200-day moving average, and it did not clear 429.7, bears need to defend these levels as resistant and take out first support at 427. If we take out 427, guys, that's your sign to look for puts. Next level will be down to 425. Good take profit zone if you're playing level to level, with 423 below that. And then the critical level, which is my 50% retracement level at 421. Guys, if 421 fails, I'll feel a lot more comfortable swinging puts, because that would be one hell of a false breakout. I think I said that yesterday, but I'm saying it again. Consistency, you know, that's good. All right, guys. Now, that's the bearish scenario. I want to be unbiased because this is unbiased technical analysis. If SPY can clear 429.7 tomorrow, that will put the 200-day moving average back in play, which is around 431.5. And if that clears, that would trigger a move to my multi-month trend line, which is at 433.26 to be exact, okay? This trend line is from all-time high to March 29th high, okay? If we clear that, possible the bottom is in. However, we have a very critical level at 435 as well, which is my 61.8 retracement level based on my Fibonacci level, which could be a very massive pullback zone. Okay, guys? So that's the bullish scenario. First level, 429.7, 431.5, 433.2. Then the very critical one that I would maybe try a long from. Not guaranteed it'll work. I will definitely cut loss, but 435. Okay, guys? So you got the bearish scenario, you got the bullish scenario. You miss anything, please watch it over again or just ask me anything in the comment section, okay? I'm going to move on to Triple Q. It had a chop day. Very chop day for the Triple Q. It tested the 329.7 support. It held. It also tested resistance at 334.5. Rejected. Okay, so it's just in chop land. I need to see Triple Q either break out or break down. All right, anything in between is just a chop zone. Okay, all right. You can to trade chops. You can try to long direct off support or short direct off the resistance level. Okay, but if it breaks out or break down, no longer chopping. And that should tell us where our next direction is. Okay, below 329.7, I got 325, then 322.4, then another support around 319. Above 333.4, I got 335.7, then a critical level at 339. All right, and here is Tesla looking like a dark cloud candle, but it did hold above the 200-day moving average. Okay, 200-day moving average is currently at 907.84. We need to see that loss. Tesla, if you're a bear on Tesla, you want to see the 200-day moving average loss. That should trigger more downside down to my 887 level. But there is a gap around 899 to 900. Yeah, around 900. So that could be a support level as well. Okay, so below 907.8, 900 is support. Then 887. Below that is 878, 858. Very critical level there. And then 842. So for me to be bullish, it needs to just start clearing or recapturing some resistance levels, starting with 923.5. Okay, we cleared this level yesterday. We closed below it today. That is a false breakout scenario. Dark cloud candle, false breakout scenario. Watch for the loss of the 200-day moving average to trigger more downside. Okay, look at the fear and greed index. Starting to get in greed, guys. That's a good sign for bears. Anyways, here's the flow sentiment. SPY back being bearish, 74% in the puts, 26% in the calls. Filter for 500K premiums or above. Now look at these. Look at these. Big size, 8,000, over 10,000 right here. Millions of dollars worth in premium, 4 strike price. These are inputs, okay? Very, very bearish plays. However, they could be hedges when it's this big. But speaking of hedges, we got one that's a lot more shorter term. August 26, okay? 8,000 in size, 3.4 million. There are calls, 431 calls. We don't know. I don't know what these, what these really mean as far as what the intentions are of the buyers or sellers, but they're worth tracking in my opinion. Okay, Triple Q, 75% in the puts, 25% in the calls. Here we go. And last but not least, Tesla, 71% in the calls, 29% in the puts. All right, guys. So that's what I have for you guys today. Thank you guys so much for watching. And if you want to be part of a profitable trading community, consider joining Uncle Charles' Discord. Link is in the description. Also is pinned in the comments below. Peace.